Ponzi scheme. A Ponzi scheme is a fraud where returns paid to early investors come directly from the money of newer investors rather than from legitimate profits. The organizer promises steady, often unusually high returns with little risk. As more people invest, the illusion of success grows because earlier investors may actually receive payments. But the system depends entirely on constant new investment. Once new money slows down, the scheme collapses, leaving most participants with heavy losses. Pyramid scheme. A pyramid scheme focuses on recruitment instead of real business activity. Participants are required to pay to join and are promised earnings if they recruit others beneath them. Each new recruit also pays to join and continues the chain. The structure grows like a pyramid, with the people at the top earning from everyone below. Because the system requires endless recruitment, it inevitably fails when new participants run out. Phishing scam. A phishing scam tricks people into revealing sensitive information such as passwords, banking details, or credit card numbers. Scammers typically send emails, text messages, or fake website links that appear to come from trusted organizations. The message often creates urgency, warning that an account must be verified or locked immediately. When victims enter their information on the fake page, the scammers capture it and use it for financial theft. Investment pump and dump. A pump and dump scheme manipulates the price of a stock or cryptocurrency. Scammers aggressively promote a cheap asset, spreading exaggerated or completely false information to convince others to buy it. As demand increases, the price rises quickly. The scammers then sell their own holdings at the inflated price. Once they exit, the hype disappears and the price collapses, leaving new investors with major losses. Advance fee fraud. Advance fee fraud occurs when victims are promised a large reward in exchange for paying a smaller upfront fee. The scammer might claim the payment is for taxes, legal costs, or processing charges related to a prize, inheritance, or business opportunity. Once the victim sends the fee, new charges may appear repeatedly. In the end, the promised reward never arrives. Romance scam. A romance scam begins with a fake emotional relationship. Scammers often create convincing profiles on dating apps or social media and spend weeks or months building trust with their targets. After the relationship feels real, they introduce a sudden financial emergency such as medical bills, travel expenses, or frozen accounts. Victims who believe they are helping someone they love send money, which is usually impossible to recover. Business email compromise. Business email compromise targets companies rather than individuals. Scammers gain access to or imitate the email account of an executive, vendor, or employee. They then send messages instructing someone in the company to transfer money or change payment details for an invoice. Because the request appears to come from a trusted source, the transfer often happens before anyone realizes the message was fraudulent. Tech support scam. A tech support scam convinces victims that their computer or device has a serious problem. The scammer may display alarming pop-ups or call pretending to represent a well-known technology company. They guide the victim to install remote access software, allowing the scammer to control the computer. From there, they may steal financial data, demand payment for fake repairs, or install malicious software. Charity scam. A charity scam takes advantage of people's willingness to help others. Scammers create fake charities or impersonate legitimate organizations, often during natural disasters or major crises. They ask for donations through phone calls, emails, or social media campaigns. The money never reaches any charitable cause and instead goes directly to the fraudsters. Lottery or prize scam. A lottery or prize scam informs victims that they have won a large prize, even though they never entered a contest. The message may claim the winnings are from an international lottery or promotional sweepstakes. To receive the prize, the victim is asked to pay taxes, transfer fees, or verification costs. Once the payment is sent, the scammer disappears and the supposed prize never arrives. Fake online marketplace scam. A fake online marketplace scam happens when scammers pose as sellers on e-commerce platforms or classified websites. They advertise popular products at unusually low prices to attract buyers quickly. Victims are often encouraged to pay through direct bank transfers, gift cards, or other methods that offer little protection. After the payment is sent, the product never ships and the seller vanishes. Identity theft fraud. Identity theft fraud occurs when criminals steal personal information, such as national identification numbers, banking credentials, or credit card details. With that information, they open credit accounts, make purchases, or take out loans in someone else's name. Victims may only discover the problem when bills, debt collectors, or credit report issues appear long after the fraud has occurred.